pick up, our services are from the corporate birth of someone's entity in Hong Kong or China. So from incorporation right through to any eventual exit, whether it be dissolution, restructuring, sale, or whatever. And we cover all the corporate support in between. So that would cover bank account opening, the company secretarial, HR, payroll, accounting, tax, and so on. The kind of clients we have, basically we are focused on SMEs, or at least they are SMEs as far as we are concerned in Hong Kong. So although we have a number of very well-known companies, including a fair number of well-known Swedish companies, such as Hestra, the ski glove company, world famous, Blue Water, Blue Air, Gant, and Oakley. And for non-Swedish companies, we have people like Boeing, Uber, Rolls-Royce, Facebook, Google, Specsavers, Dyson, Hawker Siddeley, and so on. As far as we're concerned, they're all SMEs in Hong Kong because we're covering a limited portion of their group, just the Hong Kong part, which is normally one or two entities. So our focus is on entrepreneurs and SMEs in terms of support, but we are able to support larger companies. Next one, please. Hong Kong, briefly, this is a brief history of Hong Kong for the last 25 years only. Hong Kong is quite often in the news, at least we think so. And in the time that I've been in Hong Kong, which is since 1993, we have had the handover from Britain to China, 97. Later that year, Asian financial crisis emanating from Thailand. In 2002, we had SARS, which started 2 weeks after we started our company. So that was not the best time to be starting a business, but drawing a parallel with COVID, that gives everyone hope that you can start something in a downtime and you still have a future. Global financial crisis, 2007 and 8. We had bird flu in 2008. We had Occupy Central in 2014. We had the protests in 2019. We had COVID now. Each time one of these has happened, Hong Kong has been written off. In fact, I came to Hong Kong in 93 after reading in a UK newspaper that Hong Kong was on its last life, and it was the last opportunity to come to Hong Kong and make any money. So the end of Hong Kong has been forecast many, many times. That looks like about 8 times in the last 25 years. And yet somehow we're still here and we're still thriving. So where are we? Next slide, please. We are, from our point of view, we are right in the middle of everything. The red star there marks where we are, and we are within 4 hours flying time of about half of the world's population. So Beijing and Tokyo and Singapore are all about 4 hours flight away. Hanoi is 1.5 hours. Bangkok is 2.5. Shanghai is just over 2 hours. So we have a lot of major markets and centers within easy reach of Hong Kong, which, tied in with various tax and skills advantages Hong Kong has, makes it a very good place not just to set up a business for Hong Kong or for China, or sourcing, which I'll talk about later, but also as a regional center. It's a good base to cover various other sources of materials or to market to other countries in the area. Next one, please. COVID, we have to talk about COVID. Hong Kong has come through COVID pretty well. We've had no lockdown, although I have to say we had more of a lockout in terms of people coming to Hong Kong, which perhaps is cheating, I don't know. But Hong Kong, despite multiple connections with China, including in normal times 500 flights a week, has so far only had 7,000 cases and just over 100 deaths, which is about the same rate as road traffic accidents in Hong Kong, and that's with 7.5 million people. The infection rate in Hong Kong is pretty low. We had testing of about 20% of the population some weeks ago, and the infection rate was 0.002%. Right now, we've got what they call the fourth wave of COVID, which is working out at, if it carried on for a whole year, that would infect 0.5% of the whole population, and yet that's described as a wave. So yet that's not, in my view, particularly serious. I think it shows that Hong Kong has got it under control, and we all wear masks and we all wash our hands and so on, and without actually being told to, because we had the SARS experience in 2002. Next one, please. Okay, very briefly, just as a comparison, compare Hong Kong with Sweden, the obvious one to compare with. We have a population of 7.5 versus Sweden of just over 10, so that's around 36% more. Our GDP is 363 billion. Sweden's is 556, which is about 50% more. So Sweden is obviously a wealthier country by GDP per head, but Hong Kong is still, you know, a pretty affluent society, and we have GDP average per head of about $48,000 US. Next, please. Brief overview of where Hong Kong sits. We are, because it's of the trading history and its current trading activity, Hong Kong is the 7th largest trading economy in goods. That's the value of the goods shipped through, not the contribution to GDP. But Hong Kong is increasingly a service economy as well, and it's diversified away from what they used to call the 4 pillars of Hong Kong, which include tourism and property. Other industries now, such as creative industries, the arts, media, and so on, including even gaming, have overtaken, probably 4 or 5 years ago already, tourism as a sector in Hong Kong. And we have been prudent, I guess, over the years, because you have 1.1 trillion of Hong Kong dollars of reserves, even after spending on COVID. Next, please. So traditionally, those 4 pillars of the Hong Kong industry are the trading and logistics, which employs about 700,000 people, financial services, so banking, M&A, and other property lending, other lending related services, professional services such as legal services, which might include M&A, tourism itself, which is down here at 4.5% of the economy. These figures are 2018. I've used 2018 because obviously with things that have happened since 2018, any figures we look at are vastly distorted. So the 2018, I think, are the most reliable in terms of giving a sort of picture of what is in the Hong Kong economy. But we've got 42.7% is other, which, you know, it's quite a large bucket of unaccounted for. But in that, as mentioned, we have the creative industries such as architecture, design, and so on. And they have, I would estimate that they would probably be about 10 or 15% of the economy now. Next one, please. So I'd like to just look at Hong Kong in 2 aspects. One is as a market, somewhere to sell to, and one is as a place to buy from. In terms of being a market, Hong Kong is 7.5 million people, reasonably affluent, as mentioned, and as you can see there. The thing about Hong Kong people is that they are very aware, they're very sophisticated, they adopt early, they'll have the latest Apple, they'll have the latest whatever, the latest fashion, they're fashion conscious, they're design conscious, they're value conscious. They are, you know, if there's something new to be bought or tried, Hong Kongers will be queuing up for it. And Hong Kong as a free port has no duties and has no VAT. So it's a very easy market to enter in terms of there being few or no obstacles, no barriers to enter. And you have 7.5 willing consumers waiting for products or services. Next, please. So the other aspect of Hong Kong is as a place to source your own products from. The Hong Kong's history has transitioned through manufacturing to sourcing. So what happened was that in the 50s and 60s, Hong Kong was a manufacturing base, and then it went down in the 70s, and from the 80s onwards, Hong Kong companies started to move across the border and transfer their manufacturing expertise over there. So Hong Kong has become a great place for sourcing, not in terms of making the stuff in Hong Kong, but having the expertise to control the manufacturing of products across the border. A lot of retailers actually have sourcing offices in Hong Kong, and there are certain areas of Hong Kong which are known to be clusters of sourcing, where companies not gather together to socialize, but they happen to congregate for convenience, because those areas are parts of Hong Kong which are very convenient for the central business district, but also very convenient to get up to the border and across the border to go and visit suppliers. Some retailers even pick and pack at store level for the worldwide shipment. Now, what I want to move on to is now in relation to that is the Greater Bay Area, which is rapidly developing, but has quite a long history, and is used by Hong Kong by companies to develop even higher level products and prototype, not just to outsource their manufacture. So the next one, please. So the Greater Bay Area, Hong Kong is geographic. This is how Hong Kong relates to the Greater Bay Area. Hong Kong is geographically part of the area, which was formerly known as the Pearl River Delta, and it is the area contiguous to Hong Kong itself. So Hong Kong borders has the land border with the Greater Bay Area, and sea border with Macau, which is another city in the area. And so it is really Hong Kong's back door, both in terms of a potential market, because the Greater Bay Area is Hong Kong's wealthiest, is China's wealthiest region, and it also banned in terms of a place to develop and source and manufacture products for sale to your company, your clients, customers worldwide. Hong Kong is 7.2 million people, but the Greater Bay Area is 10 times that, is 72 million people. So that's a huge market. If you, I like to think of Hong Kong compared with the relation with the Greater Bay Area as, for example, akin to London and the UK in terms of proportions and proximity and ease of doing business one to the other. The population of the Greater Bay Area, because of the developments that have taken place over the last 40 years, do comprise a big talent of manufacturing skills, as well as increasingly quality control skills. So that complements Hong Kong's management expertise perfectly, so that people can utilize the two in tandem. And I've got one case study, a brief case study, in a couple of slides. Next one, please. Right. As I mentioned, the Greater Bay Area is quite a long history. It has been officially touted since 2016, when it was rebranded as Greater Bay Area, but it was previously known as the Pearl River Delta. And so while it is government supported and encouraged by the Chinese government, so for example, Tencent and Huawei and HTC are their base or their home is in the Greater Bay Area, the area is really something more than a government initiative. The 30 or 40-year history of the skills being developed, transferred and developed in that area means that it's very much an organic entity. It has a life of its own. It's not just a question of some subsidies or some tax breaks or some encouragement, some pressure to be there or not. It's really it's a living thing, and as such it has a lot more substance. And so the case study, I think, will illustrate a little bit about how it can be used and where the skills are. Next slide, please. So the case study is a recent client of ours. They produce a time management gadget which ties into your mobile or your laptop, and it uses certain time management techniques to help those people who are too easily distracted by social media, help them to focus on what they should be doing, which is, from my point of view, is work, or whatever it might be, work, study. The key thing here is that there are lots of parts to it. It's a very nice device, actually. I've ordered two on Indiegogo, and I've seen the prototype. It looks a beautiful piece of equipment, But it's got lots of parts. It's got aside from the software, which is created in Australia, it has different plastics, different elements. It has the electronics, and of course you've got the packaging. So this particular device has part of it has been, the LCD was manufactured in Dongguan, which is just 15 or 20 minutes away from the border. The packaging also in Dongguan. Right across the border we have Shenzhen, where the plastics were, it was manufactured, and some of the plastics were actually created there. And Hong Kong provides the logistics skill, the warehousing, and the corporate structure. So the Greater Bay Area has contributed in many ways to a single product, and including Hong Kong's contribution. Next, please. Okay, now back to Hong Kong. Briefly, as Hong Kong is a very easy place to both set up business and to maintain a business. I know some of the previous presentations have also shown that other jurisdictions are easy to set up in. Hong Kong is very simple in a lot of respects. In terms of the setup, you don't need a local director or a local shareholder. In fact, you only need one director, but you have to have at least one individual director, one real person. That's a fairly recent change for compliance reasons. And you only need to have one shareholder, which can be your existing domestic company or an individual or whoever. So in other words, it can be an individual or a corporate. The only local requirements are that you have a local registered address and a local licensed company secretary. So this sector, the corporate services sector, is licensed and has been for nearly 3 years. And you have to have what they call a local designated representative, which is someone who can answer questions about the company if the tax people or the customs or the immigration have a question. And that is a legal compliance requirement, but that can be provided by the company secretarial firm. So it doesn't need to be an extra complication, an extra drag on setting up. The basic requirements are to keep accounts annually, to file an annual tax return, and to file an annual update with the registry. So quite simple. Registration takes about a week after compliance or due diligence, but it can be done online, so it can be done a lot faster. But again, provided that you have the due diligence in place, which is standard in most places. Next slide, please. Okay, and this is the last slide. As mentioned, Hong Kong is a very it's a business-friendly jurisdiction, and it's more specifically is a very employer-friendly jurisdiction. As far as tax goes, the tax rate in Hong Kong is only 8.25% for the first 2 million Hong Kong dollars, which is about $250,000 US, and it's 16.5% after that. Because Hong Kong operates on a source basis for taxation rather than residence basis, profits earned outside Hong Kong will be tax-free in Hong Kong, subject to inland revenue approval, which is what I was referring to earlier about other tax reasons making Hong Kong an attractive regional base. So without going into that tax rule too much, basically if you could be carrying on business with another jurisdiction in the region, and provided you meet certain criteria, the profits you generate from that activity, as far as Hong Kong is concerned, would not be taxed in Hong Kong. There would be zero tax. There would be exempt tax in Hong Kong. So there's a possibility that you reduce your tax significantly by using Hong Kong as a regional base. So given that the top rate is 16.5%, the effective rate on a company, and because you have the lower tax band, the effective rate is always going to be below 16.5%. And even if you don't claim any of your income is offshore in Hong Kong, the average tax rate for your company will only hit 10% when you make about $2.75 million US in taxable profits. So you make $2.75 million, you're paying $275,000 in Hong Kong tax only. There is more good news on the profits tax is that there is only one level of tax. In some countries, the company is taxed and then the dividends are taxed in the hands of the shareholder. In Hong Kong, it's only taxed at the company level. So as far as Hong Kong is concerned, if you receive dividends from your Hong Kong company, there is no tax on it in Hong Kong. There may be in a home jurisdiction, but that's that people would have to look into that separately. Apart from profit tax, we have no VAT, we have no withholding tax, and we have no capital gains tax. Personal income tax, if someone wanted to come here or be transferred here, is 15%. And the good news for the company is that that's a matter between the employee and not the company. So the company doesn't have to deduct tax and account for it to the inland revenue, which makes it a lot easier. And with certain allowances, the effective tax rate for individuals can be below 15%. And I'm probably not giving too much away if I say that mine is below 15%. The Social Security cost for employers is capped at less than $200 a month. So it's quite minimal. So in budgeting for a Hong Kong company, you don't need to put in too much for Social Security. And the final good news on employment law is very simple and employer friendly. There's very little interference with contracts, freedom of contract in Hong Kong. And there is a minimum wage of $5 an hour equivalent, which is, well, it's not very high. Obviously, the minimum annual leave is 7 days, but most employers will give more than that. Most responsible employers will give more than that. And in terms of termination of employees, in the unfortunate event that might become necessary, it's very straightforward. You do not have a cumbersome written notice process. You simply part company and pay the notice and any outstanding leave, any outstanding expenses.
Thanks very much, John. Great presentation.